Live from Bloomberg's World Headquarters in New York, I'm Shanali Basak.
And from our studios in Washington, D.C., I'm Kaylee Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
And Kaylee, it's a risk-off day in the markets as U.S. inflation comes in hot. Bitcoin falls now after hitting $50,000 for the first time in over 2 years.
We will talk about that price action with John Wu, president of Ava Labs, and the role ETFs are playing in what we're seeing.
Plus, we're also going to speak to Kristin, the CEO of the Blockchain Association. Her group is pushing back against proposed digital asset legislation being discussed in Congress, and she says it misses the mark.
All right, so all of that is ahead. But first, let's get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP Go. And what you will find is, like for risk assets pretty much across the board, it is a down day for digital assets across the board. Of course, that hotter than expected inflation coming in this morning is fueling that. Bitcoin right now is down about 2.7%. We are back around $48,500 or so after breaking above $50,000 yesterday, hitting the highest level since December of 2021. ETFs having a lot to do with the rally we have seen, but it's cooling off just a touch today. And you're really even seeing even more underperformance for some of the altcoins out there, the likes of Litecoin, for example, down 6 percentage points, Avalanche by about 5%. We're going to be talking more about that with John Wu in just a few minutes here. And of course, it's interesting to see relative outperformance today, even though it's still lower, coming from Ether, down about 1%. We're trading right around 2,600, Shanali. And I know you've been paying attention to, today aside, the rally we've been seeing in ETH.
Yeah, we should talk about how much the enthusiasm for Ethereum has grown as of late. We are seeing in the 6 months that it has been trading through that Bitcoin ETF approval, the spot Bitcoin ETF approval, as investors get more excited about a potential Ethereum ETF approval. You've seen a rally of about 40%. Actually, from the lows to the highs, that's almost 70%. And if you think about just what's happening here, Ethereum is a very different cryptocurrency than you're seeing in Bitcoin, proof of stake rather than proof of work, but yet one of the more widely accepted tokens nonetheless. If we flip up the board here and see just how many issuers are preparing for that flood here, if you do see a Bitcoin ETF also being matched by an Ethereum ETF, you have more than a half dozen issuers really coming to the surface here and applying to get the job done, including BlackRock and Fidelity. Franklin Templeton just joined the race. The approvals, Kaylee, are expected as early as this year, with deadlines being seen between really May and August. Let's see how choppy the water really gets until then.
Yeah, we know the waters are indeed often choppy. And of course, with all those moving parts, Chanel, Yvette Lalonde of K33 Research told us last week there are still plenty of positive catalysts for crypto investors to look forward to.
So the ETF was initially enough to push prices from $30,000 up to the peak at almost $50,000 in January. So I would argue that ETFs have contributed quite hefty in pushing prices higher. Now a new narrative is needed. Macro definitely plays a role, but so does also the upcoming Bitcoin halving. You can make the case that the halving is a known event and something that the market anticipates, but it's still a huge reduction in daily supply issuance, amounting to 164,000 fewer Bitcoins sold by miners each and every year. So if you contrast that to the current net US spot ETF inflow of 38,000 Bitcoins since its launch, then it's still a hugely positive factor for the market.
Joining us to discuss this optimism is Bloomberg's Isabel Lee, where we have to really start, Isabel, with the ETFs, because we've seen really a record-breaking moment for the ETF industry with these Bitcoin ETFs, the inflows in the assets. What have we seen in the first month?
So there are many metrics you use to assess whether an ETF launch is successful or not. And the key is inflows and volume. And if you look at those two, yes, the ETF launches were a success, no matter what people say. Right now, we are some 22 trading days in, and we're seeing 3.6 billion in net inflows, and that's even subtracting the 6.5 billion outflows we've seen from Grayscale. And we have Bloomberg Intelligence really churning out great reports. They said that, for instance, Fidelity and BlackRock's Bitcoin ETF was the first to hit 1 billion in 5 days. So that's very impressive. And the two were the first to hit 3 billion in around 20 days. So I can go on and on with the metrics, but then by a lot of these, they are a stellar success. And also trading volumes. They're the first to hit 6 billion in shares and trading volume. And that figure is only comparable to the launch of BITO, the Bitcoin ETF futures, and also gold, which is the gold ETF that we've seen years back.
Well, and of course, Isabel, we're now basically a month into this since these things debuted. It's a question, though, of how things progress from here, especially with the Bitcoin rally, at least for today, looking like it's fading.
So that's exactly what a lot of investors are asking. We've seen flows slow a little bit, and people are saying, okay, so is the momentum over? Is this going to be, are we going to see just a slow trickle from here on out? But then some analysts are also saying that a lot of institutions are still on the holdout. We have Vanguard Group still not listing these ETFs. We have also the likes of LPL Financial. They want to see whether some of these ETFs will shutter before they move trillions of dollars in it. Imagine if you move a lot of your pension funds there and then an ETF shutters. So a lot of people are still in a wait and see mode. But for sure, this ETF launch really validated a lot of the crypto faithfuls who now are feeling vindicated because they're legitimized by Wall Street. So this really helped the momentum when it comes to the price action, and 50,000 is a round number. Although we're seeing Bitcoin slide down for the first time in 8 trading sessions, we can still say that it's going to be a shallow pullback. I mean, people are just profit taking.
All right, Bloomberg's Isabel Lee, thank you so much for joining us. Now let's discuss this further with John Wu, the president of Ava Labs. John, always great to have you here on Bloomberg Crypto. If we just start with the price action we're seeing in Bitcoin specifically, we hit that $50,000 level. Now we're pulling back from it. Is that a ceiling we're going to be dealing with? Or do you think that this is mostly inflation in force today and this rally has a lot more room to run?
I think it was the CPI numbers that came out today that affected today's price. It's a very short-term thing. But underneath that, if you take away the macro, things are very, very healthy in terms of adoption. Isabel just said it was a great record inflows and showed some numbers. I agree 100%. In fact, I had dinner with one of the largest issuers of the Bitcoin ETF, and they so much has been said the same thing. They're super excited. I think going forward, though, your question, Kaylee, what is going to really drive it besides known factors such as Bitcoin halving or possibly the Ethereum ETF? It's going to come back down to where is the adoption and awareness happening. So as an operator, Ava Labs helps companies deploy on top of Avalanche, the blockchain. We see far more activity today after the Bitcoin ETF because of this halo effect awareness of the space from traditional enterprises, from Wall Street firms. So you look at the developer count, the application count, all have been increasing dramatically. That's ultimately where the asset class is going to improve from the fundamental adoption.
Yeah, it's pretty crazy, John, that you would have seen such an increase in institutional adoption just by the approval of spot Bitcoin products, nothing else. And the SEC was very clear, or at least Gary Gensler was, when they initially said okay to these products. This is specific to Bitcoin. Ether's still an unresolved question, and the larger regulatory landscape seems pretty much unchanged. So what still stands in the way in terms of headwinds from more institutions coming into the space? Is it basically just regulatory?
Regulation is a big one. What the institutions are doing is deploying on testnet, which is practice valueless stuff kind of thing. And they are getting familiar with the technology, understanding what the technology can do, but they want clarity in terms of the regulation. One of the areas we're hoping for clarity, maybe later this year or early next year, will be stablecoins. I think there's real product market fit with stablecoins. I think Brevenhauer Research even came out with a report saying that there's been more stablecoins settled on blockchain than the Visa network over the course of last year. And that is something that should not be taken lightly. Coinbase even came out with a report saying that in the US, consumers can save $75 billion a year from credit card fees if blockchain-enabled solutions and stablecoin was used. So to answer your question more succinctly, clarity on the regulation.
I think, John, we also have to ask about the dynamics of the system, given it's not too long ago that much of the crypto crash came from hidden leverage. And leverage, once again, is seeping back into the system. What form does it exist in now? And is it more sustainable, perhaps, than what we've seen in the most recent years?
Leverage is slowly coming back, but it's nowhere near where it was in 2021. Even look at the volumes of Coinbase. If volume is, equates or correlates to the leverage in the system, Coinbase with all this activity is still nowhere near the volume they saw any given day in 2021. In fact, we've talked to a lot of banks And SAB, 121 is a rule that they can't get around. If you have $1 of crypto assets, you have to have another dollar of some other asset in order to provide any lending or any leverage, so to speak. And they're just not willing to do that because the returns on that are so low. So you need regulation to clarify this asset class versus others. And I don't really worry about leverage right now. Even though it's come back a little, it's nowhere near where it was before.
I'm curious also about what you think about tokens outside of Bitcoin and Ethereum in particular. You look at just Solana, for example, that has really jumped back. It has shrugged off any worries about the network outage about a week or two ago. Your own Avalanche token has also seen significant gains over the last 7 days, about 14%, matching that of Solana. How much competition is there between the coins outside of Bitcoin and Ethereum?
So you talked about Solana, you talked about Avalanche, and you talked about Ethereum. Put Bitcoin aside. Bitcoin is a proof of work, different from POS. And in terms of the layer ones, there are different types of layer ones. Avalanche is EVM compatible, so assets can move back and forth between Ethereum and Avalanche. It's whereas Solana is probably more of a standalone, call it, monolithic chain. But the reason why the asset class has improved, I think, on both of those is because there are people looking at the transactions on chain, looking at the development on chain, number of developers coming, and the activity that's happening. And there's no doubt in the last, call it 4 months, the activity has steadily been going up on both those ecosystems.
All right, John Wu, president of Avalabs, thank you so much, as always, for joining us. We appreciate your time. Still coming up here, Kristin Smith, the CEO of the Blockchain Association, will be here to discuss why she's pushing back against digital asset anti-money laundering legislation being discussed on Capitol Hill.
And later, we'll talk about the alleged fraud involving Gemini Trust and Digital Currency Group. It was 3 times bigger than initially thought, allegedly. The details ahead.
And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
I do feel like for crypto founders, US still lacks the clarity of regulation, plus a lot of support system. It seems very political. During the election year, things becomes different. After that, it becomes different. So a lot of founders are still doing offshore entities or moving to Europe or moving to UAE. But at the same time, I feel like a lot of family offices or a lot of public pension funds who wanted to hold Bitcoin for a long time, they have good alternative increasing the liquidity in the market.
That was some of our conversation with Kavita Gupta last week. And today, the Blockchain Association sent Congress a letter co-signed by 80 national security professionals pushing back on some of the anti-money laundering related legislation being discussed on Capitol Hill. Our next guest said in the letter, quote, Senator Warren's legislation would inadvertently hinder law enforcement and national security efforts by driving the majority of the digital asset industry overseas. This shift could also lead to loss of valuable expertise and visibility for the U.S. in the blockchain realm. Further, this legislation, if implemented, will have no meaningful effect on the foreign illicit actors it targets. Joining us now is Kristin Smith, CEO of the Blockchain Association. She's here with me in our Washington, D.C. studio. Kristin, great to see you. Of course, this legislation originating in the Senate, trying to get a handle on some of these illicit efforts in the crypto space. You are not the only ones pushing back against this. The fact is, though, the Senate and the House, for that matter, are really struggling to get anything across the finish line in this Congress. Does this really threaten to become law?
Well, listen, I think a bill begins as, a new law begins as a bill that is introduced. And so I think it's important, especially when Senator Warren has been so public about trying to advance this legislation, that we take it seriously. I think our hope today is we had this letter that was signed by 80 professionals, mostly who work within our association, who have military and national security backgrounds who care very much about the security of the United States. And they're saying, hey, Congress, we care about these issues too, but it doesn't make sense to put the Bank Secrecy Act. This was legislation that was developed for centralized institutions when there isn't a clear picture of what the ledger, what the accounts look like. That's what the Bank Secrecy Act is designed to regulate. With public blockchains, we have a lot of transparent information. And so what we're asking for is a more nuanced conversation that can look at the unique features of this technology. Let's identify what are the real gaps here and create a different kind of system for regulating this space if it indeed needs to be further regulated. It's important to know that the Bank Secrecy Act does apply to some parts of crypto already. And so I think our hope is that we can build on this conversation. We're very excited that the House Financial Services Digital Assets Subcommittee is holding a hearing this week where they're going to get deeper into these issues, because we need to move the conversation to a place where we can really get into the weeds and really get into the details of the technology and figure out the right way to come up with a good regulatory structure.
Kristin, let's play devil's advocate for a second here, because if you are a normal way financial institution in the United States and you are subject to that Bank Secrecy Act, you're sitting there asking, why wouldn't crypto be subject to the same standards? But you have this pushback from the industry saying this is a crypto killer in a lot of ways as written. So as proposed, what is the real issue in terms of how it would impact operations in the crypto community?
Right. So the Bank Secrecy Act does apply to parts of crypto already, right? So if you have a centralized institution or organization, a company like Coinbase or Kraken that has customers, that takes custody of those funds, they do comply with the Bank Secrecy Act. They have a customer relationship. They can collect information about who those customers are, and then they are in a position to file reports with the Financial Crimes Enforcement Network if there's something suspicious or a high-value transaction that occurs. The problem with crypto networks is that there are different parts of the ecosystem, like node operators, like software developers, of smart contracts and validators. There are different parts of the ecosystem that aren't centralized. There's nobody there to collect the customer information and do the reporting. And so unlike with the Bank Secrecy Act, where we're trying to get visualization into what the transactions look like, you can go see the transaction on the blockchain. Like, they're there. That's easy to do. It's just trying to figure out how to match which of those transactions are associated with suspicious wallets. That's what we should be focused on, and not trying to rebuild the ledger that's already publicly available.
Well, and this is one area of focus in the Senate, but of course the House has been largely focused on other initiatives, including stablecoin legislation. It seems the feeling was that could maybe be the one that ultimately gets done in this Congress before the election in November. We got 9 months to go. Is that still seeming like it could happen?
Yes, I think there's still hope for stablecoin legislation. This is an issue that, largely it's very close to getting to the finish line. I think there's conversations happening with the Senate and the House and the administration to try to figure this out. This is an obvious gap in current statutory authority that everyone agrees needs to be filled. And so I'm optimistic we can get there. There's also market structure issues, and the House was very active in this last year. I think, as you well noted, Congress is not particularly high functioning right now when it comes to moving through legislation, which is fine, right? Congress takes time to do things. I think where we're looking right now is to the lame duck, and is there an opportunity to piece a couple of things together that would fill some of these regulatory gaps when this sort of election pressures have died down. I was a staffer on Capitol Hill for 10 years, and very magical things can happen at the end of a Congress. And so I think that we are working right now to get out and do more education with members of Congress, to try to have more thoughtful education around, or thoughtful conversation around illicit finance, and really kind of be in a position that if something comes together in the lame duck, that everybody understands the policies that they're considering.
Blockchain Association CEO Kristin Smith, we thank you for your time on a busy agenda in D.C. Now, coming up next, we'll talk about how the damage from alleged fraud between DCG and Gemini and its investors ballooned to $3 billion being sought by the New York Attorney General. Stick with us. We'll talk about that next. This is Bloomberg. The alleged fraud involving Gemini and Digital Currency Group was 3 times bigger than initially thought, according to the New York Attorney General in a revised lawsuit that now seeks $3 billion in restitution for more than 230,000 investors. The New York AG accuses the firms of failing to disclose to investors the risks of a crypto lending program that they started together in 2021. Eric Larson reported on this for Bloomberg and joins us now. Why now is the New York Attorney General going after more, especially when the firms have been fighting the first allegation in the first place?
Yeah, that's a really good question. Like you said, the suit was filed back in October, and now this amended complaint alleges that since the time that the lawsuit was filed, additional investors and customers have come forward to complain about losses. So the Attorney General, Letitia James, says that they actually uncovered $2 billion in additional alleged fraud. And while the original complaint focused more on Gemini and the fraud that was allegedly done by DCG through Gemini, they said that these additional complaints were for investors who had given money directly to DCG's Genesis. So it was just another group of customers coming forward to make these complaints, and they filed this lawsuit as a result, this amended lawsuit.
And Eric, what do the defendants have to say about this?
Well, they have said that this is all, that they have done nothing wrong. First of all, they said that they have only engaged in fair and honest dealings with their customers, especially Barry Silbert, who came out very strongly when the suit was filed and said this. Gemini, for its part, even though they're named as a defendant here with DCG and Genesis, Gemini has said all along that they were actually a victim of this fraud. And so they actually supported the allegations against the other defendants, but complained that they never should have been sued, that they're basically punishing the victim by being named as a defendant in this complaint.
Eric, what are the next steps in this lawsuit?
Well, what we can expect to see are motions to dismiss from all of these defendants. I wouldn't, based on what we're seeing, it's likely that they might have a very different version of events here. They might be blaming the others for what happened. But eventually, the judge will make a ruling on these various motions to dismiss. Once they hit, they could be a different outcome for different defendants, and then eventually, potentially, a trial.
All right, Bloomberg's Eric Larson, thank you so much, and looking forward to your continued reporting on this. That wraps it up for Bloomberg Crypto today, Shonali, as we're seeing a down day for digital assets. Bitcoin right now trading at $48,620 off the back of hot inflation data. Of course, you're seeing that risk-off attitude reflected in markets across the board. The NASDAQ 100 right now down about 1.4%. The 2-year yield up 14 basis points. Maybe we're not going to see Fed cuts as soon as this market previously thought. So wondering how much that macro narrative will continue to factor into crypto markets specifically.